Hello, everybody. This is Sunko, the Korean bro. Today is 2022, September 2nd. Uh, let's look at the articles about stock market. Okay. These days, we're having a negative trend, especially this week. Last month, we had an upward trend, but then now it's going downward again. We'll see how it goes at the end of this year, but we'll see. Mm. A lot of experts expect that we'll have another downward trend at the end of this year and the beginning of next year, but we never know what's gonna happen, so we'll see. Uh, okay, chip gear maker. So let's see. Could Nike stock be oversold but still overvalued? Lululemon set to soar into September. U.S. hiring slowed in August as employers add 315,000 jobs. Is Oracle a buy after strong quarter second results and more share buybacks? Campbell Soup Company is good for income portfolios. Streaming music is driving Live Nation's domination. The institution's choke and chewy ink results. DocuSign has important issues to address when it reports earnings. Chip gear maker Integris has potential, but is it viable now? Asian stock market. What's about Asian stock market? Biden administration awards $1 billion for economic projects. Um, and U.S. hiring slowed in August. Okay. Lululemon set to soar into September. Is Oracle a buy after strong quarter second results and more share buybacks? Uh, Asian stock markets lower ahead of latest U.S. jobs reading. Hmm. How will the chip benefit Nvidia stock? It's what I read last night. And what else do we have? This is it. Okay, first let's go through first article. Lululemon. Just when equities were starting to look shaky again after decent run to end summer, um, athleisure brand Lululemon has given the would-be bears pause for thoughts. They reported their quarter-second earnings after the bell rang to end yesterday's session, and the numbers were red hot. Keep in mind, Lululemon at its core is a bricks and mortar retailer, and so among those stocks most susceptible to the soaring inflation prints and cooling summer spending trends that have been gathering pace all year. Top line revenue was up an impressive 29% year on year, and well ahead of what analysts had been expecting. Similarly, their earnings per share also beat the consensus and were more in line with what you'd expect from a tech stock last year than from a retailer right now. Comparable sales jumped 23%, while gross profit increased at 25% to $1.1 billion. Not only did the numbers for the past quarter impress, management's forward guidance also raised eyebrows for all the right reasons too. Bullish guidance, Lululemon. Lululemon now expects net revenue for quarter third to be in the range of $1.78 billion to $1.8 billion versus a previous consensus of $1 billion, which would represent a 3 year compound annual growth rate of about 25%. Hmm. Okay. Anyway, let's look at what Lululemon, this company, does. Lululemon. Lulu. Uh, hmm. Its headquarters is located at Vancouver. Together with subsidiaries, designs, distributes, and retails athletic apparel and accessories for women and men. Okay, so it's a retailer company, but main product they provide is main product they provide is clothes, basically accessories and apparel for women and men. It operates in two segments: company operated stores and direct to consumer. The company offers pants, shorts, tops, and jackets for healthy lifestyle and athletic activities such as yoga, running, and training, as well as other sweaty pursuits. It also provides fitness-related accessories and footwear. The company sells its product through a chain of company-operated stores, outlets, and warehouse sales, interactive workout platform. Hmm. Okay, I'm just gonna skip on this one because it's not like software thingy. U.S. hiring slowed in August as employers add 315,000 jobs. America's employers slowed their hiring in August in the face of rising interest rates, high inflation, and sluggish consumer spending, all of which have weakened the outlook for the economy. Mm. The government reported Friday that the economy added 315,000 jobs last month, down from 526,000 in July, and below the average gain of the previous 3 months. The unemployment rate rose to 3.7% from a half century low of 3.5% in July, as more Americans came off the sidelines to look for jobs and didn't find work immediately. The smaller August gain will likely be welcomed by the Federal Reserve. The Fed is rapidly raising interest rates to try to cool hiring and wage growth, which have been consistently strong. The business is typically pass the cost of higher wages on to their customers through high prices, thereby fueling inflation. So hiring slows. It's the point, right? Hiring slows, right? Okay. Campbell Soup Company is good for income portfolios. The price action in Campbell Soup Company shed 7% in the wake of the quarter four earnings report. But income investors should be sharing the news. Campbell Soup Company is a high yielding value among consumer staples stocks, a buy and hold name for income investors. Uh, and just went on sale. Yes, the quarter four results were only as expected, and the guidance was tepid, but neither is worth a high single digit decline in share prices, especially with risk off names back in favor. The decline is driven more by the CEO commentary than anything else, and even it is not as bad as it may sound. The company says inflationary pressure is still a risk, but growth is still expected on the top and bottom line. And there is an opening for outperformance as well. With previous pricing actions fully reflected on the shelf. Hmm. And elasticity is expected to be slightly above fiscal 2022 levels. The company expects sales growth in both divisions. The company expects improved supply chain execution and disciplined investment in its brands to drive further share recovery. Productivity improvements and cost savings initiatives will continue to play an important role in mitigating inflation, which is expected to remain elevated. Mm. Campbell Soup Company can buy inflation. So the point is, its growth is expected, and unlike long-term investors love this company. Uh, of course, they had a difficulty, but it seems that they are gonna have a good outcome at the end. what isn't it the point of this article, right? Productivity improvements and cost savings initiatives will continue to play an important role in mitigating inflation, which is expected to remain elevated. Hmm. What's the bottom line here? Okay, should you invest? Okay, um, hold rating among analysts. Top rated analysts believe these five stocks are better buys. Okay, hold. People rated hold uh, on this one. Streaming music is driving Live Nation's domination. Live entertainment and ticketing and promotion giant Live Nation stock is still down minus 24% for the year despite having its best quarter ever. The promotion powerhouse has emerged from the pandemic stronger and more dominant than ever. Live Nation is widely known for operating Ticketmaster, but also owns and operates live events, entertainment venues, and performs talent management for many artists under its Artist Nation brand. The company has been Teflon amidst anti-competitive practice, price fixing, and hidden fee lawsuits. Live Nation has consolidated the segmented live events market by acquiring promotions and events, very similar to how World Wrestling Entertainment consolidated the professional wrestling industry. The digital streaming and trend, e-commerce and migration have been tailwinds driving momentum for the company. Hmm. Let's look at this in detail. Live Nation. Hmm. Operates as a live entertainment company. It operates through concerts, ticketing, and sponsorship advertising segments. The concert segment promotes live music events in its owned or operated venues, and in rented third-party venues, operates and manage music venues, produces music festivals, creates associated content, and offers management and other services to artists. The company was formerly known as Live Nation Inc. and changed its name to Live Nation Entertainment. In January 2010, Live Nation Entertainment Inc. was incorporated in 2005 and is headquartered in Beverly Hills, California. Hmm. Moderate by streaming music, Live Nation. Okay. Hmm. Let's look at chart and see uh, what we have here. Hmm. Okay, let's skip on next one. Okay, let's skip. Okay, what about Chewy? The institutions took some big bites of Chewy over the last 2 years, driving institutional ownership up to nearly 100%. This is quite a feat considering the short interest is also running near 25%. So there are quite a few shares in the market. The net of institutional activity, however, shifted in favor of the bears in calendar quarter second. So don't start thinking about the short squeeze is about to happen. Chewy reports strong guide way. Hmm. Chewy. What is Chewy? Company. Chewy. 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 Hmm. Chewy, together with its subsidiaries, engages in the pure play e-commerce business in the United States. Pure play e-commerce business. The company provides pet food and treats, pet supplies and pet medications, and other pet health products, as well as pet services for dogs, cats, fish, birds, small pets, horses, and reptiles through its Trade.com retail website, as well as its mobile applications. It offers approximately 100,000 products from 3,000 partner brands. The company was founded in 2010 and is headquartered in Dania Beach, Florida. Okay, Chewy. So it's a company that sells pet related products. Pet related products. Hmm. I myself am really interested in pet industry because people are not likely to put limit on their spending in terms of mm, buying pet food for their pets because they think it's worth it. I mean, like it's their dog, right? So uh, it's like their child. You know, you don't you don't you don't try to save money when giving some food to child, right? You would rather spend more money and give good stuff to your child. It's the same thing. Uh, it's the same thing. So hmm, uh, if I look at the chart right now, mm, hmm. If I had much more money, then I would buy this because its potential is its potential looks great. Oh, hmm. Internet retail, consumer cyclical. Uh, as people leave their own, and because of individualism, I guess. Uh, Even in Korea, a lot of people tend to live on their own. Uh, and pet along with that trend, people people tend to uh, because people don't want to be lonely. Um, they have pets around them, and uh, it's a it's a big trend. It's a big trend anyway. So, hmm. I'll probably add this to my watch list to see if I can get to have a better chance. Yeah, obviously. Okay, let's go to the next one. DocuSign has important issues to address when it reports earnings. DocuSign is continuing a long, painful decline that started almost exactly 1 year ago in September 2021. What a different time that was. DocuStock was trading for over $300 and was being fueled by a pandemic tailwind. But in 2022, the tailwind has turned into a strong headwind. At issue is the question of what DocuSign can do for an Encore. DocuSign has a big goal of achieving $5 billion in revenue. However, that would mean the company will have to generate more than twice of the revenue it's currently delivering. Hmm. Okay, perhaps the company's earnings report on September 8 will provide some clues. Investors will be looking for growing revenue to be sure, but they'll also want to see the company return to profitability. Earnings per share turned negative in the last 2 quarters. I think JU was asking the right question in his article: how long can DocuSign go? As painful as it might be for investors who just jumped on DocuStock in the middle of its rally, my fellow market beat contributor was correct. It's important for investors to pay attention to the floor right now. Here are some reasons to support the thought. Okay, let's see. Building more use cases. Can you teach an old dog new tricks? Hmm. Uh, we'll just see. Hmm. Hmm. Okay. DocuSign being the clear leader in the e-signature category benefit as business needed to conduct business online. But then ours came with the question, what's next? DocuSign's answer to that question is the Agreement Cloud. As DocuSign says, the Agreement Cloud gives the business everything you need to connect and automate your entire agreement process. But this the company means not just electronic signatures, but creating entire smart contracts online, including tracking of negotiations, agreements, amendments, and more. Of course, hearing the word smart contract makes me immediately think of blockchain and all the possibilities continue to emerge there. However, with the cryptocurrency world having its own issues, perhaps that's a concern for another day. This isn't to say that DocuSign isn't growing. Revenue last quarter was up 25% year over year. While the rate of growth is slowing as would be expected, the company has a base of customers that will allow it continue to deliver stable revenue. But Stable doesn't get the company to its $5 billion goal, nor will it do much to excite growth minded investors. Okay. We'll see about that because I myself invested a lot of money into DocuSign and hopefully it goes up soon. Just like this article says, what's next? You know that they provide a good service, which is an e-signature. It's something really valuable, especially in pandemic period. But then so so people can sign and they can share it online. But what's next? So what they are saying is that they can automate agreement system, uh, and what comes next on my head is like blockchain thingy. But it's just another concern because will that be possible? I mean, there's a still security issues going on with mm, blockchain thingy and all. So wait, and we'll go over to the next one. Okay. Chip gear market, Integris has potential, but is it viable now? Integris is an example of a company that provides products or services to another industry and can benefit from the latter growth. For example, copper producer Freeport McMoran sells to electric vehicle producers, which can boost its fortunes. Integris develops, manufactures, and market micro contamination control products, specialty chemicals, and advanced materials handling solutions for the semiconductor industry, as well as others. It serves a global customer base. Hmm, hmm. What's the like about this? Biden administration awards $1 billion for economic projects. President Joe Biden and Commerce Secretary Gina Raimondo are announcing on Friday $1 billion worth of federal grants for manufacturing, clean energy, farming, biotech, and other sectors that will go to 21 regional partnerships. The winners were chosen from a 529 initial applicants um, vying for grants that were part of last year's 1.9 trillion coronavirus relief package. The Biden administration has repeatedly laid out the vision for the economy that is more self-sufficient and driven by high-tech manufacturing and the development of renewable energy. The whole point of this is we're not going to let you get left behind as we transition to a more digital economy, to a more technical economy, to a green economy. Raimondo told the Associated Press, people want to work where they live. People want to work, people want to know there's a place for them in the changing economy. Unlike much of the pandemic aid that was meant to address immediate needs, the $1 billion in grants is part of a long-term effort to revitalize parts of the country that have needed an economic drought for existing industries and capital for new ventures. Okay, so it's this Biden gave some money to uh, potential uh, industry uh, potential companies. Yeah, and uh, what he wants is a green economy, technical economy, uh, digital economy, and it's a transition that he wants to make. Okay. Hmm. Asian stock market lowers ahead of latest U.S. jobs reading. Lowers. Okay. Beijing Asian stock market were mixed Friday ahead uh, of U.S. jobs data that might reinforce Federal Reserve plans for bigger interest rate hikes to cooling surge inflation. Shanghai advanced while Tokyo, Hong Kong, and Seoul retreated. Oil prices rose more than 1.50 per barrel dollars. Investors looked ahead to U.S. data and also hiring to see how the economy is responding to four earlier hikes to cool inflation that is at a four-decade high. A strong reading would give ammunition to Fed officials who say higher interest rates are needed to slow economic activity and reduce upward pressure on consumer prices. Okay, now done with market beat, and let's go over to Yahoo Finance. Okay. Hmm. U.S. added 315,000 jobs, now slightly beating estimate. Amazon overruled in labor case. Okay, what Soros needs to do next after choosing a new CEO? Hmm. Here's where Snap goes from here. Okay, why the Federal Reserve matters to you? BBY's biggest problem going forward. Too strong buy dividend stocks with at least 8% dividend yield. Okay, Michael Big Short Bird makes a direct prediction. Millions will be wiped out. Robert Kiyosaki says that a big crash he predicted is here. But right now could also be the perfect time to go. With big market scores, these 47 stocks expect up to 1,230% growth. After selling Nvidia last month, Cathie Wood's Art and Snapshot graphic chipmaker stock at its 50 2-week low. But you can't trust Friday's jobs report and what it means for the S&P 500. Don't be duped by the doom and gloom. JP Morgan says this reliable contrary indicator points to 11% stock market surge. Cathie Wood sold Tesla stock and bought Nvidia after the chipmaker's tough day. Why bearish money manager likes gambling stocks and is ready to dump Apple? Warren Buffett stocks Microsoft, Google among 26 names on this train. Datadog gets new buy rating. It's not enough to help the stock. Wait, smoking weed is now more popular than smoking tobacco in the US? It's weird. Okay. People shares pop as analysts rally around the stock. Bonds enter first bear market in at least 30 years. Amazon overruled in labor case. NLRB recommends certifying State Island Union vote. Amazon was handed a defeat on Thursday in a contentious battle against its New York City workers seeking to unionize the fulfillment center in Staten Island. A report issued by an administrative law judge for the National Labor Relations Board, a hearing officer for the agency recommended that votes submitted during the facility's March election narrowly in favor of unionization should stand. After conducting a hearing over 24 business days via the Zoom, and carefully reviewing the evidence and arguments made by the parties, the hearing officer Lisa Dunn concluded that objections should be overruled in their entirety. Mm. So something is going on with Amazon, definitely. Labor case. Okay. Next one, what Starbucks needs to do next after choosing a new CEO analyst. Starbucks appointed Lakshman Narashman as its next CEO on Thursday, starting October, and Wall Street is weighing what role he will play in shaping the coffee giant's critical turnaround strategy. Okay, a former top executive PepsiCo who stepped down from his role as CEO of Louisville Maker will officially begin his role and join the Starbucks board of directors in April. Hmm. Current Starbucks CEO Howard Schultz will stay on in that capacity through April 2023 to show the Rashman the ins and outs before going back to his board role while also serving as an advisor. But first, Schultz and his Hawking presidency at Starbucks will take center stage at a September 13th Investor Day. Mm. Mm. Okay. Next. Okay. Here's where Snap goes from here. Snap this week announced that it was laying off 20% of its staff and restructuring its business. It's a massive shift. Laying off 20% of its staff. It's a big thing, right? And restructuring its business. It's a massive shift that involves major cuts, not just to hand count, but also to the social media and camera platforms product line. The company announced that it would be discontinuing investment in various areas across the organization, including Snap Originals, Minis, and games. Even drone camera product Pixie is hitting the cutting room floor. According to one analyst at Raymond James, Snap is doing what's necessary to move the company in the right direction going forward. Overall, we believe Snap is taking the right steps to refocus the business to drive improved profitability in this uncertain macro environment. Aaron Castro wrote in a note on August 31st, we believe the Snap updated revenue commentary is a modest positive for the other online and names we covered, though would note we assumed a larger slowdown for Snap. So the author also thinks that laying off 20% of their staff is the uh, right direction. Uh, they're underway, and it's the right direction going forward. Okay, overall, Refocus the business. Here it says refocus the business. Hmm. Here he says, I personally don't see influencers really adopt Snapchat the way they do it for Instagram or YouTube. Okay. Snap had once. It once went up to 83 and now it's 11. God. Let's look at Snap charts. Hmm. Okay, why the Federal Reserve matters to you? If there's one thing that we have learned in the last week, it's the Fed tells markets what to do, not the other way around. And on my last day here at Yahoo Finance, I have one parting thought. Americans interested in the Fed's far with inflation should listen as well. 48 weeks leading up to meet our stocks bounced back and our bond yields fell as investors began pricing. And expectations the Fed's rate hiking would soon end. It took less than 9 minutes for Fed Chair Jerome Powell last Friday to whip the financial markets into shape, making it clear that the central bank was not done with its rate hike yet. We will keep at it until we are confident the job is done, Powell said in remarks delivered at the Fed's annual conference in Jackson Hole, Wyoming. Another takeaway for investors: don't ignore the Fed. So don't ignore the Fed. That's the point, right? Hmm. Deeper understanding of the Fed and how it shapes our economy benefits everyone. If there is any silver lining out of this period of inflation, it might be greater public interest in these matters. Okay. Next. Hmm. Bad Bath and Beyond's biggest problem going forward. Bed Bath and Beyond is a smoldering pile of garbage, experts say, and the struggling retailer's existential future hangs in the balance. The big question has become: will Bed Bath and Beyond run out of money? While the company revealed the drastic steps on Wednesday to raise cash, cut expenses, and alter the sales trajectory, Wall Street thinks the retailer's outlook remains highly uncertain. The main concern is that the Bed Bath& Beyond is performing so poorly. Same-store sales fell 26% in the most recent quarter, and the balance sheet is such store shape that the company will be forced to raise even more cash in 2023. Where and when that cash comes from is great unknown. Hmm. Okay, here's a key comment here. The company has historically not benefited from strong U.S. Consumer, as seen in multi-year company, uh, mass competitors, and emerging digitally native players becoming a greater headwind. The leadership change has potential to be a catalyst longer term, though near-term instability likely remain on the sidelines until initiators have a more meaningful impact on the P&L. Okay. Okay, Michael Big Short Birdie makes another dire prediction. Call him a what is it? A Cassandra financier Michael Burr's predictions tend to come true. His latest is worrisome. Uh, the Big Short depicted his bet on the subprime mortgage meltdown, which sparked the 2008 financial crisis. Okay, the financier has since become a market statesman. He mainly plays the role of Cassandra. Uh, the name of uh, his profile on the microblogging website Twitter is Cassandra BNC. Uh, he's the bearer of bad news, and he's been delivering it for the past few months. The investor who recently liquidated his entire portfolio of U.S. stocks, save one, says the worst for the economy is yet to come, as Federal Reserve Chairman Jerome Powell reiterated on August 26th that the central bank would continue to raise interest rates aggressively to fight inflation. Burr indicates a crash is coming. Oh God. Okay, so he has a dire prediction, and he was right before. And he's popular because of the movie named what was it? Short, Big Short. Anyway, he was right about that on that subprime mortgage event, and now so far has been right this year. And will he be right next year, or about the future? Wait, let's see about this article. Burr seems to feel that a stock crash is shortly going to happen. Stock crash. Well, stock short, okay. In May, the investor predicted that the S&P 500 could fall to 1,862 points over the following few years based on the crashes of past years. At last check, the index was around 3,908. From there, his call would be a drop of 52%. The greatest speculated bubble of all time and all things. The greatest speculated bubble of all time and all things has been created since summer 2021. That's because small investors went heavily into the meme stocks and cryptocurrencies, portending the mother of all crashes. Hmm. We'll see about that. But hmm. His dire prediction definitely. Even Robert Kiyosaki says that the big crash he predicted is here. But right now could also be the perfect time to get richer. Here's how. Silver, oil, All markets crash in real estate, stocks, gold, over Bitcoin. He tweeted last week. But one asset strength is very well known at the moment: oil. It's not necessarily good for your wallet because higher oil prices mean you are paying more for gas. Middle class wiped out by higher oil inflation. Of course, if you own investments with exposure to energy sector, your portfolio in 2022 will probably look better than those without it. The price of crude oil slipped in June and July, but it's still up 34% year to date. That said, investing in commodities is a particularly volatile undertaking. So Kiyosaki says everything will have a downward trend, but if you consider investing silver and oil, it's a better option. Hmm. Many consider big data to be the next big thing, and that's where Snowflake shines. The cloud-based data warehousing company founded in 2012, servicing thousands of customers across a wide range of industries, including 506 of the 2021 Forbes Global 2000. Snowflake. Momentum is strong in Snowflake's business. In the 3 months ended July 31st, revenue surged 83% year over year to $497.2 million. The company continued to score large customer wins. It now has 246 customers with trailing 12-month product revenue of more than $1 million. Okay. Uh, Now I have last two articles. Okay, after reading it, I'm done. Okay. Datadog gets new buy rating. It's not enough to help you stock. Datadog. What's Datadog? Datadog has the ability to take a big bite out of the security software market. One analyst from Bank of America said on Friday. Datadog reported earnings and revenue for its second quarter above analyst estimate, but provided guidance for both the full year and the current quarter. The one analyst said was cautious. Datadog. Software application. New York. Provides monitoring analytics platform for developers. For developers, information technology operations teams, and business users in the cloud in North America and internationally. The company's SaaS platform integrates and automates infrastructure monitoring, application performance monitoring, load management, and security monitoring to provide real-time observability of its customers' technology stack. As a platform also provides user experience monitoring, network performance monitoring, cloud security, a developer-focused observability, and incident management, as well as a range of shared features such as dashboards, analytics, collaboration tools, and alerting capabilities. The company was incorporated in 2010 and is headquartered in New York. Mm. So uh, it's not, mm, it hasn't, it has nothing to do with dog or pets. It's more of a software platform that supports company. You know, they help company to have a better efficiency by providing what is it? Here analytics platform. Uh, so we're now left with Snaptics. The first company we'll look at is ready to bottom fishing again? Yes. Any good angler can tell you that there's plenty of good eating just waiting at the bottom of the creek or the pond or the lake. The same concept also holds for stocks. Investors can always find some quality equities down at the market bottom. Stocks get down there for a multitude of reasons. The reasons aren't always related to any fundamental flaw in the company, or it's just trading policies. Sometimes it's some idiosyncratic business move or overreaction to related news item or even just the bad luck of getting swept up in a general market downturn. So, how are investors supposed to distinguish between the names posed to get back on their feet and those that remain down in the dumps? That's what the pros on Wall Street are here for. Synaptics. The first company we'll look at Synaptics leaves where man meets machine. This company develops a tech that makes our high-end computer interfaces work. Synaptics product line includes wireless connectivity, video interface ICs, graphic chips, audio DSPs, multimedia processors, touchpad modules, fingerprint sensors, touch controllers, and more. It has also developed its proprietary Cortana platform on ultra-low power AI that act autonomously on data from audio and visual sensors. There's no shortage of demand for computer systems or for their interfaces, which has been a boon for Synaptics business in the past few years. Wait, let's see. Synaptics. Ooh. Hmm. San Jose sells semiconductor product solutions worldwide. The company offers audio smart for voice and audio processing, connects smart for high speed video. No, let's go to next one. Okay, Rapid7 is the second stop we're looking at. Boasts over 10,000 customers who depend on the company's cybersecurity product offerings, including cloud-supported packages for visibility, analytics, and automation. By simplifying complex data sets, Rapid7 Market is possible for users to automate routine security tasks, investigate and shut down cyber attacks, monitor Rapid7. Hmm. Ah, what a bump. I got no company this time. I wanted to really find a company that I can buy at this point. Anyway, this is it for today, and I'll see you guys tomorrow or the day after tomorrow. Okay.